Suprajit Engineering, we have Ajith Kumar Rai, founder and chairman at Suprajit Group, joining in with us. They reported their numbers, saw an expansion in terms of margins. Also, buyback has been approved in the recent time, and that will be completed before 30th of September. What are the details in terms of outlook for the company? We will talk to the management. Thank you so much, Mr. Rai, and good afternoon. And I want to start by talking about your numbers. Good set of numbers, growth in terms of the revenues, profits, but overall, talk to us about in terms of the industry demand trends that you are seeing. How is that shaping up? And what is it that you're watching out for in terms of the outlook of your margins specifically? 12% is what you've been able to sustain in the last year as well. Do you think the company would go back to that 17%, 16% margin that the company had seen in 21, 22? Is that something possible?
Good afternoon. Thank you for having me on your channel. I think in terms of the business outlook, India business is, the automotive passenger vehicle is growing nicely. Two-wheeler is growing nicely, whereas passenger vehicle had some headwinds with also a lot of pipeline stocks at the dealer end. So overall this year, I think we may have a high single-digit growth in the Indian automotive industry. From a global perspective, I think the industry scenario is totally different. I think the best one could expect is a flat to 1 to 2% growth in the global automotive business. So we play in that market. So despite that, sort of muted performance, considering our performance in the quarter has been quite good, I would say. And going forward also, we feel that the significant new contracts that we have won in the last 2-3 quarters, which will get into production right from now onward to the next 1 to 2 years, we see a very good traction in the business growth as far as the overall global business is concerned. In terms of the margins, I think we have been in the 12 to 14% consolidated margin historically, whereas on the standalone, we are at about 15-16%. On the consolidated basis, we are, due to the slightly lower performance of controls division, we are at about 11.5%. We expect to be in the range around 12+% by the end of this year. Whereas on the standalone basis, we continue to have a solid performance of 16-17%. So that would continue as I see it.
I want to understand, what kind of conversations are you having with your key clients, both in India and overseas? I want to understand, where is this confidence coming from? Is it more number of launches coming in? Or is it more penetration by the existing companies in the existing models? Where exactly? And is it durable for next 2-3 years? Does it appear durable?
I think Indian economic growth is quite robust. So obviously the transportation has to play a crucial role in that pursuit of high growth. So I would say that Indian automotive industry will grow. I'm not sure whether it will be double digit, but at least, between 7 to 10% kind of a growth is possible. Right now, the two-wheelers are outperforming in the first 3-4 months of the year. But I think overall this year, we'll be at that 6, 8, 9% maximum kind of a growth that we can expect. So the global business is something different, but what's happening with us is different. There is a consolidation of global business. Secondly, there is also an interest with the customers to de-risk, let us say, one country, one geography, that helping us. And thirdly, and more importantly, the kind of footprint that we have of onshoring near the customer, close shoring near to the region, and the low cost from either from China or India. We have solutions to our customers for every one of their requirements. I think that is really clicking the deals for us. And some of the recent deal wins have been exceptionally good. And this consolidation will only help the stronger and more competitive players like us.
Mr. Rai, also talk to us about when your additional capacities, both here in India, actually come on stream and the full capacity utilization is hit. Then what kind of potential revenues are we talking about, and how much time will it take?
So our global cable, capacity is about 400 million, and I think our lamps capacity is about 110 or so million. I think we are only at about 60% kind of a capacity utilization at this moment. So there is a long way to go. I think we are, of course, doing some additional capacity expansion or strategic investments, but we have sufficient capacity to meet our at least next 2 years of growth. So we are quite comfortable to take on more business.
comfortable to take on more businesses, what you're highlighting in terms of capacity. I also just wanted to understand specifically, you did highlight a bit about two-wheeler, you did mention touch upon EV, but what is your expectation for EV and for the company as the Suprajit electronic division? How do you see that moving in terms of the growth now?
EV is an important part of our strategy, although in the last few months we see the EV customers not really hitting the targets that they have set during the course of the year. There have been slight tempering for various reasons. We don't know fully. But EV will be there for a long term. I think the question of market penetration of EV, there will be a significant, on a growth on a year-on-year basis. But in terms of the overall, market share of whether between EV or whether between ICE or whether, hybrids or whether it is hydrogen, I think that is something that we are very closely watching from a global perspective. Yes, in China, EV is catching up quite fast. Europe is trying to do well. US is still probably lagging behind. But overall, EV should penetrate. And the interesting part is that we are in the EV play as well. Not only through our electronics division, which is doing most of its work with the EV customers, but also the cable requirement, particularly for the passenger vehicles, seems to be completely unaffected by any of this change of technologies on the engine side.
Right. Mr. Rai, talk to us about, when you are widening your product portfolio, setting new capacities and working closely with your clients, what kind of levers you have for profitability improvement from here on? Innovation or technology or design, what exactly are the areas where you have more levers for improving your profitability at the company level?
One is the scale of operation. I think we to start with the fact that we are the top 2 cable makers in the world today gives us that scale of capabilities of purchasing at an optimal price compared to a small player. So we buy very optimally. And because of the multiple plants we have and the geographical locations we have, we also understand the fine operating capabilities and efficiencies in various places. That gets cross-channeled to our other units. That helps us in improving our operations. And I think the kind of efforts that we are doing in terms of automation, in terms of STC deployment of products across our plants gives us beyond cable capabilities as well. So what's happening in the process is that our the basket with each customer, the value basket is continuously increasing. We were a pure play cable player 10 years ago. Today, we are a multi-component, multi-location, multi-product company. And that gives us a big strength to get larger share of the customer's wallet.
Sure, Mr. Rai, thank you so much for joining in with us this afternoon on ET Now and talking to us about the company's growth outlook as well as in terms of the industry.
If you like this video, then like, share and subscribe to ET Now.